8 of the 10 manufacturing divisions reported positive growth rates in the first quarter. Manufacturing and finance sectors made the biggest contributions to growth. The production of food and beverages was the main catalyst behind the industry's positive showing. At the same time, the contribution of finance sectors was mainly driven by financial intermediation, insurance and pension funds, as well as real estate and business services. The improvement in mining and quarrying industry was pushed by increased activity in gold, platinum group metals and iron ore. Household consumption expenditure also edged up together with the personal services industry.
Household expenditure was driven largely by restaurants and hotels. It actually grew at 6.9%, and the contribution of restaurants and hotels was 0.3 of a percentage point. It was followed by health, which grew at about 2.9% while contributing 0.2 of a percentage point.
The marginal improvement in the first quarter didn't seem to impact on the local currency, with the rand relatively unchanged from Monday's close at around 19 rands 20 to the US dollar.
We're all very well aware of the headwinds facing South Africa, from power to GDP to high interest rates and the like. So the fact that number came in with expectations and slightly ahead in terms of the year-on-year number meant that you saw the bond markets rally a little bit. You've obviously seen the currency come back. But I think that's also a function of the fact that both the bond market and the currency, or the rand, was very much kind of oversold last week. So I think we've also seen a little bit of bounce back from those kind of very pessimistic levels we saw last week as well.
Growth from the agriculture, forestry and fishing sectors contracted for the second consecutive quarter. This was primarily due to lower economic activities reported in field crops and animal products. The electricity, gas and water industry also fell, largely to decreases in electricity and water consumption.
The electricity problem is the biggest Achilles tendon for the performance of our economy. Yeah. And unfortunately, we continue at a very slow pace to try and find solutions instead of maybe being more aggressive. And I know that the problem that is at ESCOM cannot be sorted out overnight, but I do think we need to take this with a very, very big sense of emergency and try and reverse as much as possible.
Total gross fixed capital formation also went up 1.4%, indicating increased spending on infrastructure by government. Meanwhile, Maluleke says StatsSA has challenges with skills and talent retention, with a vacancy rate of nearly 20%. He says the organization needs financial assistance.
Of course, it takes time to build some of these skills and expertise. It takes us about 20 years to build them. And once we lose them to international organizations and private sector, we can't readily and easily replace them. So if we had funding, of course, we would be replacing them quite time and again, so that when we lose them, we don't feel the pinch as much.
Diabo Seto, SABC News, Johannesburg.